All right, welcome everybody. This is the SangLucci.com free webinar, and today's topic is on summer trading. And obviously this comes right on time, seeing as how we are going into the summer months. And also we had a big reversal in the markets from the big uptrend that we were on. And this is the time where, you might want to start thinking about adjusting your strategies for the current environment that you are in. But before we go ahead and get started, my colleague Charlie has some things he wants to say to everybody before we get started. So Charlie, take it away.
What's up, guys? So, thank you for joining us here for the
Charles.
Can you guys hear me?
Wow. Okay. Well, so much for that. I don't know where Charlie is.
Lucci, can you hear me?
You can hear him? All right, great. I can't.
Okay, if you guys can hear me, all right, we're hearing him. Okay. All right, Lucci can't hear me, but that's all right. So, guys, thank you for joining us. Good to have you here. The reason I'm popping on right now is first to let everyone know who's going to be watching this via recording. We have a lot of people who watch via recording these days instead of joining live. So, if you are watching via recording, you can check us out at www.sanglucci.com. You can check us out at MarketFi. Just go to marketfi.com and go to the options section. You'll see the products that we offer on there. But more importantly, I want to ask you guys that if you are interested in learning more about our $5,000 options product, to type your email address into the chat right now. And if you're watching via recording, shoot me an email to charlie@sanglucci.com. That's CHARLIE@SANGLUCCI.com. The reason that we are beginning to innovate a new product here, I shouldn't say beginning, we've been doing it for the last 2 months, is because we get a lot of people saying, hey, I got a $5,000 account, maybe even less than $5,000. I want to learn how to trade options. And, we do teach people with that level account in our classes, in our 12-day course. But, we also teach strategies that require, more buying power. So we wanted to create a product that's specifically cultivated for guys with lower accounts. So we want to hear your feedback before we roll this thing out. We want to know what you guys want to see. We want to know what would be ideal for you. We just want to be able to sort of pick your brains before we really get this thing launched this summer. So type your name, or not your name, your email into the chat, and later tonight we'll be shooting out an email asking you guys for some feedback. Again, if you're watching via recording, just shoot me an email at charlie@sanglucci.com. We'll make sure that you get your voice heard in terms of us innovating this product. And without further ado, I will hand it back to Lucci, and he can school you guys on how to trade in the summer.
All right, thank you, Charlie. And again, guys, make sure you throw your emails in your chat box or question box so we can use that for our survey and figure out how to best create this product. So, without further ado here, let's talk about summer trading. The first thing that I want to really hit home here, and this is basically the idea for this whole webinar, is that you have to understand what kind of environment you're in. And that way, you can really adjust your trading strategies to compensate for what's going on. And let me just paint a nice picture for you here. Let's say we're in a market like this, where every single news report that comes out is always positive. The reaction is always positive, even if it's a negative, crappy report. Let's say from jobs, or let's say from ISM manufacturing numbers, or whatever the hell it is, home sales. Even if the numbers are bad, the reaction is always positive because the sentiment on the street is one thing and one thing only. So right here, bullish, 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 and chances are you knew what was going to happen the next day. So therefore, holding overnights was not it wasn't a big deal. It wasn't crazy that you were holding along overnight. Now, that was then. That was when we are in a trending environment. The good trader understands what kind of environment he's in and then plans his strategies as such. So if I'm in a market like this, and I'm looking at stocks like large cap stocks like Google or Priceline and Amazon, and I'm looking at big picture breakouts on these stocks, then I can afford to give them some leeway. And that way I can buy a weekly option or maybe a couple weeks out, and I can hold for a couple more days. I can let the thing work just because I have a good idea of what the sentiment is going to be for the next couple of days. Okay? Now, market changes. Market changes completely. We have a big reversal, and then notice the trend is different. Okay? And what is the trend now? The trend is suck people in long and totally pull the rug and screw them all, right? That's the trend right now. You saw it here, you saw it here, you see it here, you saw it today with the gap up today, and we just totally gave up. You saw it yesterday, you see it every single day, okay? Now, how many people do you think have actually adjusted their strategies? Let me give you a perfect example, okay? Let's take a look at this Amazon, all right? Now, Amazon, and as you can see for the past year, right, this thing has been doing nothing, okay? It hasn't joined Google and Priceline and all that, but she actually had a breakout the other day. She actually had a pretty big breakout, and you consider where all this chop is, right? At around 272 to, 270, 272 and change, okay? This is a big picture breakout, but what kind of environment are we in, okay? What if this were to happen, and let's go back to May, okay? We take a look at the May chart for the SPY, right? What if this Amazon breakout was to happen in May? What do you think would happen? Do you think this thing would rip through 275, go to 280, and then keep going to 300? Yes. The answer is yes. In the environment that we're in right now, is it possible for her to do that without getting smacked back down by the markets? No, it is not possible, okay? Take a look at this July monthly that most people are actually, I myself was in for the past couple of days. I buy this for a breakout. I get my move, and meanwhile, everybody's sitting there looking for more, higher prices, and higher prices. It looked great, okay? Take a look at Amazon for that day, June 10th, okay? And then take a look at what the market was doing. All right, at that same time. Let's go ahead and take a look at a 10-day on the SPY, okay? Market was holding up here, okay? We hit a new low, all right, but we ripped back. Goldman Sachs even went to all-time highs that day, okay? Let's go to this. This is an all-time high for Goldman Sachs. How many people do you think they squeezed into this one? Oh, yeah. Oh, yeah. I bet half of you guys are sitting in this chat room right now, sitting there holding Goldman Sachs calls, okay? This is an all-time high. This is what this market is doing right now, okay? And then Amazon, the same thing. This is a nice breakout here. It looks like she's going to keep going, okay? Everybody is holding all these calls. Remember, there's plenty of weeklies here, so I can show all the weeklies before it. All of them closed pretty close to their highs. Everybody's holding on to these things, assuming that, okay, all right, we got a big picture breakout. Technicals look good, supply and demand, all that cockamamie technical indicator bullshit. Everybody says, all right, this is good to go. And then what happens? Japan comes out and says, hey, we suck, and where's your option now? And where's your option now, right? This is what most of your call options or most of your put options are going to look like in the summertime. This is what it looks like in the summertime. If you're not ready for this, then again, you haven't adjusted and you haven't realized or compensated for this new environment that we are in, okay? Now, there's obviously different aspects to the summer trading environment, which we're going to go over, but this is the major picture right here, okay? Most of your options charts are going to look like this, okay? They're going to rip one day and then absolutely tank back to nothing the next, simply because there is a lack of direction, okay? That means the market is going to screw people both ways, and that's really it, okay? So you take a look at this bar chart for the last 10 days. Look, I mean, look at this nonsense. Look at this. You kidding me? What are you going to do here? So you're going to go long. They're going to catch you long every single time. So most people are going to go long here. You're going to go long here. You're going long here. You're going long here, and you're going to get screwed every single time. And then for the shorts, you're going to get short down here. You're going to get short down here. You're going to get short down here, and everybody gets smoked as well. Okay? So what does that mean here, guys? What does that mean? That means you have to tighten up your time frames. Okay? And what do I mean when I say time frames? I mean, okay, you can't let these things ride for too long. You get some profit, you take it quick. So you gotta cut down to scalpers' time frames. All right, couple hours here, couple hours there, and that's it. Just go for when you can get that small momentum, and then boom, take your profits, take your losses, and cut it out very, very quickly. Okay. Another thing is, if you take a look at actual long puts and long calls during any particular day. So right now, let's take a look at this Netflix today. And this was a move that I wanted to get, but I was on a bus, I was on a train this morning and couldn't really get it. So this Netflix, I wanted to go after it for a short because, I was looking at all this saying, all right, they're just kind of slowly squeezing people in long and then just kind of burying them. And then today was a decent sell-off through its recent lows around 210. Okay. Now, when you actually take a look at a put option, though, and the viability of you actually making money here, it's not that great. Take a look at this chart. Do you think you could have made money here? I mean, think about this. Number one, you're going to be in late to the party here. So you're probably going to be in at around 2.25 and change. You're going to see all these profits. You're not going to take it up here, by the way. Okay. Classic human behavior. You're not going to sell up here, all right? So you're going to let this thing come back down on you. Chances are you're going to get chopped up through all of this, and then finally you get that premium gain, which chances are you're not even around there for, okay? So to actually go long a put and a call in this environment is tougher than it would have been in an actual trending environment, okay? And this is the difference between putting the pedal to the metal because you have a trend and chances are you know what's going to happen tomorrow, or pulling back the reins because, you really can't find the direction. You can't find the solid direction for more than a few hours, right? Because the market is just up and down, up and down, up and down like crazy. Okay, so from an intraday trading perspective, you have to learn how to adjust for that. Okay, so what are some of the things that we can actually? What are some of the tangibles that we can actually say you need to start doing? Okay, so number one thing that you really want to do is adjust your strike prices. Okay, so in a trending environment. And let's go back to some of these high flyers like and let's even take a look at this Netflix. In a trending environment, to go outside, a decent amount out of the money. So, for example, with this Netflix, to go 10 to 15 points out to play a Netflix call when the market is trending is not that far-fetched. You can really go out a little bit and risk a little bit more when you're in a trending environment, okay? And because Netflix can put in 10 to 20 point moves on the upside, all right? So that's cool. Now, when you're in an environment like we are now, and where this stock is up and down 5 points every single day, you got to tighten up your strikes, okay? You can't go that far out. So I'll give a perfect example here. And you take a look at the premiums on the Netflix options chain, right? And let's take a look at the ones that are close to close expiration. See how cheap all the calls are, okay? And this is because of the environment that we're in. Take a look at these 220s, okay? If this was back in May, this would probably be worth $1 on a Wednesday, okay? But the volatility has really come down. And what else? What else? Since we're looking at the calls, we know the market is reversed, so they're showing no signs of really any significant rallies. So no matter what, these options are going to be cheap as shit. Look at all of this. This is 8 cents, 15 cents. It's only Wednesday, and these things are trading in the pennies. Look at this 215. I sold this option at $1.40 today, okay? And closed at about 95 cents. Where do you think this thing is going to trade tomorrow? She's going to trade at 50 cents tomorrow, okay? So you really have to tighten up your strike prices. So if you're going to play a move on the Netflix, it's not that much of a bad idea to stay in the money. So if you're going to play Netflix long, let's say tomorrow, then play around with the stuff that's in the money, okay? And the reason why is that with that low volatility and with that less sort of expectancy from Netflix to do anything crazy, you're really going to sort of suffer a lot of time decay and a lot of indecision on that particular option, okay? So that's number one. Tighten up your strike prices. Play more closer in the money options, okay? If you're going to buy if you're going to go long a particular option, meaning go long a put or go long a call. Okay? Now, how to adjust strategies for the lack of follow-through. This is one thing that we're also going to talk about today. And I'm going to bring up the concept of writing. Okay? Writing strategies are where it's at for the summer. Okay? Now, unfortunately, most of you guys don't have the account size to be able to do this properly. However, for those of you that do, I would recommend scrapping any long call and long put trade completely for the summertime. And what I would recommend is writing premiums for most of these options, okay? Because from today, or let's say tomorrow when the new weeklies open up, okay? So Netflix, I think the new weeklies are already opened up, okay? So you go to the June 22nd, and let's take a look at the 2:30 calls, okay? 2:30 calls here for next week. Okay, those aren't even for this week. These things are trading 80 cents. To me, I take a look at this chart, I take a look at the volatility, I take a look at everything, and I'm saying to myself, there's no way this thing is getting back up there unless this market goes back to all-time highs. So slowly writing all these premiums to eventually go to nothing is a great strategy for the summertime because of the lack of volatility. Okay? Now, you guys might be looking at these charts and saying, well, what do you mean lack of volatility? These stocks are going crazy. Okay? Just because we're saying there's low volatility, when we're in a chop environment, it doesn't really matter. Okay? Your stock can be up and down 5 points and all that kind of stuff. But the fact of the matter is, it's not trending. Everything is just all over the place. Yes, you might see a little bit more volatility, but when you're looking at out-of-the-money calls, out-of-the-money puts, it doesn't matter. It does not matter. These things are going to trickle down to nothing by expiration. So the best strategy that I can recommend to any of you guys for the summertime is to aggressively write options, all right? And you take a stock like, let's say, for example, tomorrow or towards the end of the week, I want to aggressively write this Google. And obviously I know, like, okay, she topped out. Now she's just kind of sit in this chop range between $900 and about $860. So what do I do? What do? I take a look at my option chain, and I say to myself, all right, screw having to go for alpha moves during the day. Like, I don't want to buy a put in this thing and have to sit through all this bullshit. The chances of me making money is not that great, simply because of all these wild shakeouts and all this other nonsense that you really have to deal with. So what is another way that I can use, or what's another strategy that I can use to really make some good money? And that's by, writing some call options. So I take a look at this 900 call for June next week, okay? That's 30 points out of the money, and I can sell this for $2 right now, okay? And then as you go up, look at all these premiums, 905, 910, 915. You got $1.50 here, $1 here, 100 contracts on each of this shit. And I'm making $100,000 by the end of the, by the time expiration comes around. And that's because we're in this just kind of choppy environment where these things are just going to go up and down, up and down, up and down, up and down. Okay? But they're just going to stick in these respective ranges that they have. And you take a look at this price line as well, you probably see the same thing. You look at this huge range now that is setting up as well. You got 790 up to about 820. So I go out further out of the money, look at the 840s, look at the 850s, or even down to the puts, 760s, 770s, and I start writing these options and then slowly working my way into the money. All right? That's essentially the strategy that I personally will be going for and focusing on for the summer, because I know the volatility is going to be low. And I know we're going to lack direction for a significant amount of time. And what does this do to most retail traders? Let's talk about this for a second, okay? And let's talk about the psychology of summer trading, okay? With the lack of volatility, okay, and I shouldn't really say volatility, but with the lack of direction, if you have a big lack of direction in the market, who are the people that are making money? Well, think about it, okay? It's all about sentiment. Okay, how many people do you think went long right here? And feel free to raise your hands, because I know half of the people who are long are probably in this chat room. How many people do you think went long here? How many people do you think were long here? How many people do you think were long here? How many people do you think are short here, and short here? Okay? And these are this is the retail money. Okay? And it's easy to push the sentiment and perception of the retail money. So smart money is out there pushing stocks to these extremities and then just rocketing them right back into their respective ranges. And that's how you sort of trick the retail guy and make money off the retail guy. So you take a look at this Google. How many people do you think were long here going for a move to fresh all-time highs, right? Or even short here, going for the big boom down to 820. This is all retail money. And it's just open season for smart money and market makers to sell you guys put options down here and to sell you guys call options up here for a jacked up premium and then screw you out the next day or the day after. That is the name of the game when you're in consolidation. And consolidation happens to be summer trading. So again, if you're going to try to trade aggressively during the summertime, you need to be aware of the environment that you're in, the likelihood of your trades working, continuing to work, and having the follow through. And then case in point, I got the Amazon right here, and this one screwed everybody and a lot of people in my chat room. We were all on this thing, and I was expecting the break towards 300 to happen right here, and bam, they're like, nah, fuck that. We don't want to do that, right? So how much more does one have to endure to catch a move here on Amazon or any particular stock? Everything is about timing. And if your market isn't trending or your market goes against you, which it clearly did on the Amazon, meaning you don't have the market that's trending with you, then, you're not going to get that trade. You're not going to get the follow through that you need on that trade versus a period in time where the market is trending. Now, most traders can't just sit there and say to themselves, okay, you know what? I don't like this environment, therefore, I'm not going to hold an overnight. Most traders can't even do that because, there's so much greed there and they want the money, they think it's right, and most people are going to hold long right here, okay? Thinking that, holy crap, yes, this is going to work, but they're not accounting for the environment that they're in. Okay, and this is one of the big failures of a lot of traders during consolidation periods or light volume trading periods, which happens to be during the summertime. Okay, so I don't want you guys to be those traders. Make sure you tighten the ship up. Okay, tighten your shit up. That means take your profits when you have them, cut down those losses a lot quicker, cut down your time frames, and even lighten up your position size. You don't have to go balls to the walls because your instinct is going to tell you, hey, who knows what's going to happen tomorrow, because we've seen the market already gap up and gap down a ridiculous amount of times every single day now, okay? And then to get stuck on a position, let's say to get stuck on a long position right here, you know how much that hurts, man? Look at this. We were at 165.5 2 days ago. That was 2 days ago. And now what? We're down 40 handles? Get the fuck out of here. You kidding me? What are you going to do? What are you going to do with your long position here? Okay? How many people do you think are long Goldman Sachs right now? Okay? Looking for a move to 170 and 175. How many people do you think are long this thing? Right? And they're getting smoked right now. Their call options are worth nothing. Okay? And that's simply because of the environment that we're in. You have to respect your environment. If you don't respect it, you're going to get smacked. You will get smacked, and you'll get smacked every single day. And that's not, that's not cool. It is okay to not trade, okay? And if you notice, the past 2 days, I haven't done shit, and there's a reason why. And I'm looking at this market right now, and I'm very happy that I made that decision, because chances are I would have lost my ass. I would have lost my ass, all right? So, guys, let's take some questions here. Let's take some questions before we wrap it up. Again, this is the whole spiel on summer trading. Some key points here are to really cut down your time frames, cut down your trading size or your position size, okay? Those are the two key points. And then realize you're not going to get that follow-through that you're expecting, okay? And that's simply because the market itself is going to be up one day and then down the next day. Okay, So make sure you are taking your profits quickly. All right. Mushin is saying in my, what is it? IMHO, is that humble or honest opinion? I don't know what the hell that is. This summer we'll have a lot more volatility than other summers. Mushin, could be. But right now we're setting up for a pretty shitty summer. And this is just like every one of the other summers that we've seen. So if you take a look at the market right now, all this up and down nonsense, I'm seeing like another month of consolidation. If we break out into another trend, hey, it's game on, man. So if we're a short trend or we're another long trend, game on, man. So, you change it up then and you keep going. But right now, as I'm looking at all this kind of stuff, this is not looking fun, okay? Let's see. What else we got? Hold on one second. Rohit is saying, how do you pick up an option so you are not paying a lot of premium? What strike is there a rule? Rohit, to really understand that, you might want to take one of our classes. But just to give you a gist of it, you really need to start watching the level 2 of that particular option. So basically what I'm saying is that you're going to take a look at a chart like this, or, just a level 2, and then you're going to understand, like, okay, where there's some buyers and sellers on that particular option for how long, or for however long it's been open for. Okay, so you take a look at a monthly on this one. This is a Netflix 210 put. You're going to be able to look at this because, again, you're looking at it every single day, and you're going to be able to gauge, like, okay, where there's buyers, where there's sellers. This will help you out with finding the right option and, what price you want to get in at, okay? Corey is saying, so in this environment, is it best to go with the weeklies? Depends on what you want to do. So, Corey, I would say in this environment, it is best to scalp options and not necessarily weeklies or monthlies. I think either would work, but to scalp. That is the important concept. And when I say scalp, that means, let's go back to this Netflix for the day here. And when I say scalp, I mean hop in at $3, sell $4.50. For example, guys, this is the trade that I made today. Later on in the afternoon, I sold because I didn't want to short, because I didn't want to deal with being long a put. I shorted this option in the afternoon. Okay, and this is when the market broke down again. I shorted this option from $1.35 and then covered right here below $1. That is scalping. Okay, that's what I'm talking about. Those are the kind of trades that I'm talking about. Okay, so you write here and then you cover down here. Okay, or vice versa for the puts if you're going to go long puts. All right, but I am saying writing is easier. This chart, you know what? Let's do a comparison here. This chart right here, would you rather write this at 3.5 and cover it 1, or would you rather deal with this? And this is a perfect example right here, okay? The writing looks clean, whereas this looks like fucking mayhem. Look at this, okay? Or would you rather be long at 2, hold through all this nonsense, which, by the way, you can't do, okay, and cover at 5? What would you rather do? What would you rather do? And you're not going to get 5, by the way. You'll probably end up holding overnight. This option is going to go to 2.5 overnight. It's not that simple, okay? To go long a directional in a choppy environment like we're seeing right now, it is much more difficult than just understanding the sentiment and writing a credit spread, okay? It's much easier to write a credit spread to play a directional move than it is to actually buy for the direction, okay? Roxana is saying, I'm just going to stay all in cash. That is a great idea. You know what else you can do? You can sit on the beach all day without stressing out about all this nonsense. I think that's a great idea. Let's see. Zach is saying, on Priceline or Google in the current week, how far out of the money do you target for writing options, or is it case by case? Zach, it's definitely case by case. But to take a look at the Google, you really have to watch these things consecutively to get an idea of really how far you want to go out. But ideally, you want to go out as far as possible in the beginning and then work your way in. So, for example, let's look at this week. Okay, let's take a look at this week. And these are some strategies that I'm just going to use for this week. Jeez, look at all these freaking calls. All right, so let's take a look at the 900 for this week. Holy shit, it's already 18 cents. So I can't get any premium on this. Look at how far down I got to go. Oh, that sucks. So this 890 looks like looks okay, man. So I'll take 60 cents on this one and then try to just burn this down to zero. And then again, as I'm looking at the tape, as I'm looking at the sentiment, making sure that it's just kind of stuck in its particular range, I'll sit here and write a little bit more and maybe go down a little bit closer. So for example, if tomorrow the action is weak and she gets down to 860, I'll probably wipe the 890s out, start getting into 885s, and maybe even start getting into 880s. All right? And then as she rebounds, I'll start writing 840 puts, 850 puts, and then slowly just work my way in. That way, if she closes it around 870, you know, I'm locked in profits on 890, 880, 850, 840. I got all that premium. Okay? So that's the idea behind the writing strategy. Obviously, it's not as easy as, you know, just showing out here. It's not that easy. But to me, it makes a lot more sense than going for a directional move, which is, chances are is not going to have any follow through, and it's just going to be ridiculously complicated to hold. However, this chart doesn't look that bad for an actual short. Okay, let's keep going. David is saying, so we should be scalping, and when the technical indicators show a long or short, we should take the market maker perspective and go the other way. That's a great way of putting it, David. You know what? You should take that, remember it, or write this shit down or something, and then actually put it to use. So what David is saying is basically do the opposite. He's basically saying do the opposite of what your indicators are going to tell you or your charts are going to tell you. So case in point, everybody goes long right here. You know, the market maker is sitting there gladly selling you guys call options, and they're coming away scot-free while you sit there holding the bag. You know, so it's similar to that. So yes and no on that question. You really have to understand tape a little bit more, David, to do that correctly. But you're on the right track, man. Eric is saying, for those of us without the capital to write options, would doing spread work in this market? Yeah, absolutely. So you can do credit spreads. So, for example, let's say I wrote the 900 call, and then I bought the 910, you know, to spread it out. So that way your broker will ease up on you and allow you to do some credit spreads, provided you have the clearance to do so. Okay? So absolutely, you can play a credit spread too. And most of the time, guys, I'm playing credit spreads. You know, but right off the bat, I'm getting in aggressive naked, and then I'm slowly building the other side. Okay. Let's see. Rohit is saying I was holding SCTY until it crapped out. Dude, what is this? This is a solar. This is crazy. I have no idea for you, buddy. Let's see. Paulie D is saying, webinar idea, details on trading margin accounts and selling premium. Maybe. Dan is saying, in last week's Goog action, how did the options you wrote earlier in the week fare into the bounce from 850 to 875 on Friday? Great question. How did you play the bounce? Did you adjust the options you wrote? Write puts on the way up. Bingo. Now, okay, this is a man who knows what he's talking about, okay? So basically, what is he saying right here? All right, right here when this thing bounces. So, Dan, absolutely. And again, you have to understand, like, we are tape readers. So at the very essence, we are tape readers. So if our stock is long or bullish sentiment, we need to now pile in on the put side. And that's exactly what we did. We slowly piled in on the put side, got rid of most of the right calls, and then got in on the other side. And you wait for these things to kind of top out and look kind of toppy, and that's when you move back into the call side. So ideally, Dan, what you want to do is you want to write aggressively against the move, okay? So if you see this Google slowly going down, and all of a sudden you kind of see it bottom out, this is the best place to write puts, whereas most people are going to do what? They're going to buy puts here, okay? You think of the mind of the retail trader. What are they going to do right here? They're going to buy puts. And notice the wick on this candle, guys. It went all the way down to 847. What do you think they did? They got everybody short, all the longs bailed, and that was the beginning of the move up. So therefore, everybody is short here, buying puts, going long puts. Market makers are selling them at high premiums, and then they get crushed, absolutely crushed. And the same thing happens on this side. Everybody goes long, all the shorts cover, okay? Market makers are selling calls at high premiums, and bam, all those call holders that are buying here get fucked, absolutely fucked. That's what kind of environment that you're in right now, and you really need to adjust and sort of play things as you see them. If you had a trending environment right here, you can buy some calls and hold, okay? This is when market makers lose money, all right? You want to be in those times where market makers are losing money, okay? And it's very difficult to spot those times, obviously, because they don't want you to spot those times either, all right? Terrence is saying, how about today? Squeeze them tomorrow. I wouldn't be surprised if we get a rip back to 163 on the SPY, and then we just trickle all the way back down. I wouldn't be surprised at anything. So, you could toss anything out there. And that's the point. Nobody has a clue what's going to happen tomorrow. I don't. You don't. The guy next to you who always says he knows what the hell is going on, he doesn't have a freaking clue either. Okay? So why fight that? Accept that. So if you can accept that and create a strategy around the fact that you have no fucking clue what's going to happen tomorrow, then that's the one that you want to go after. That's the one that you want to go after. And if you truly have no clue, just sit out. Sit on your hands. Close the platform and go to the beach. Go eat his cheesesteak. All right? Go play in the park on the monkey bars. I don't care what you do. Just don't put yourself in those shitty situations that you know are so enticing to get into. Okay? You got to respect your environment. All right? That's really the end goal of this particular webinar. Respect your environment, guys. All right? Any other questions? If not, we'll go ahead and call it a day. Again, guys, this will be recorded, and we will put this on the website and on the YouTube channel and the Twitter and everything as well. Let's see. Question. Any thoughts on Apple weakness? You know what? To be honest, I still want to take this thing long, but they're screwing people every step of the way. So I would sell calls. I would just sell calls. Anytime this thing rallies, I would sell a call. So if she puts back up to 440, just sell a call. If she even pushes back up to 436, just sell a call, because all they're doing is slowly riding this thing down. I have no idea. I think there's going to be a point at which this thing is really going to move. But you never know. You really never know. Sonny is saying, wouldn't it be better to go long on puts for Apple monthly expiration? All right. So Sonny, I'm gonna bring you to a perfect example. Okay. And you'll see this on the put side as well. Okay. So we're going to go back to Amazon, and you're going to take a look at this consolidation, and you're going to tell me what you would do right here. And I already know what it's going to be. You're going to say, let's buy some monthly calls. And you go ahead and you buy those monthly calls, and you have some nice premium here, and then you get raped. All right? And again, it's the kind of environment that we're in. Okay? Now, obviously, Apple is a little bit different because, it is showing a lot of weakness. But what you're going to find is that even if you buy that monthly put, right? Let's say you buy an Apple monthly put, you're not going to be, the swings and the shakeouts are too much. There's so much to shake you out of these things. And, you really have to tighten up, okay? And then entries and exits are very complicated on swing trades, especially in this kind of environment, because you don't know when to buy it. You don't know when to buy a freaking option for a swing, okay? And then again, Sonny, just take a look at this chart. When do you think you would have been short? You would have been short right here, okay, off this first breakout or first breakdown to 435. You would have got squeezed out. You would have got your ass squeezed out completely. You would have lost here, and then you would have said, screw it, I'm not going to play this thing anymore. Okay? So you got to look at it from the reality perspective, okay? I want you to understand, start thinking about your own human behavior, all right? I know it, you know it, and, you have to start respecting it, okay? So there's a lot of dumb things we all do, and case in point, everybody goes long right here, and then gets absolutely smoked. So swing trading options in this kind of up and down environment, your option is not going to be priced well enough for you to hold that thing. Okay? So Sonny, give it a shot, man. Give it a shot and prove me wrong. Okay? Let's see. Eric is saying completely unrelated. Check SWY up whatever in the after hours. Holy shit, Safeway, huh? Nice. Nice. I could care less though. I don't even look at these things. So that's all you, man. I'll leave that one up to you. However, I would probably trade this thing tomorrow for, if you guys are equity scalpers and you don't really play options, I would probably mess with this thing. All right, guys. Let's call it a day. And again, we will have this recording up for you guys on Twitter and all the regular places. All right? Enjoy your evenings, everybody. Hope you enjoyed the webinar. We'll see you on the next one.